Sure, everybody likes big, solid dividends.
I have a plan.
It's the main reason why many investors pursue real estate investment trusts.
You've got a plan.
But a sizable payout and solid cash flow aren't enough to make a REIT a sure thing.
I have part of a plan.
And it can be hard to make astute choices while adding real estate to your portfolio.
I have an idea.
Brad Thomas, editor of the Forbes Real Estate Investor, looks at all real estate investment trusts to separate the smart picks from the fool's gold.
What one man can do, another can do. Say it again. What one man can do, another can do. Say it again.
Each week here on Money Life, Brad brings you one choice to consider for your portfolio, looking at its pros and cons.
Whoa, now slow down.
So that you can make well-informed choices in managing real estate within your investment portfolio.
What one man can do, another can do.
So put your thinking cap on. It's the Intelligent REIT of the Week.
Yeah.
Right now.
That's right. And what one man can do, another can do. You're going to learn how you can pick intelligent REITs. That is a big part of what we do here on the Intelligent REIT of the Week. My guest, of course, is Brad Thomas, editor of the Forbes Real Estate Investor. And if you want more information, well, go to Forbes.com/newsletters, and there's a longer web address that'll get you there. You can find it at the moneylifeshow.com site where we list our regulars, or go to iREITinvestor.com. You can follow Brad as well on Twitter. He is at Swan_investor, but right now he's on Money Life. Brad Thomas, welcome back to the show.
Thanks so much, Chuck. Good to be on the show today.
The intelligent REIT for this week is
Retail Opportunity Investment Corporation.
Retail Opportunity Investment Corporation. That is ticker symbol ROIC. A little bit different than your first couple of picks here. I find it interesting that you're going to go with a retail REIT at a time when I've been hearing numbers about retail sales that haven't been so great. So why is the Retail Opportunity Investments Corp the Intelligent REIT of the Week?
Actually, I'm in Las Vegas this week at the Recon Conference, which is what we call the Super Bowl for shopping centers and everything retail. Happened to be out here, and I actually interviewed or met with the CEO yesterday of ROIC. But absolutely, this show, Chuck, is a pretty good indicator of retail. You know, I was here in 2007 and 6, and there were record numbers of people at this conference, you know, in the 50,000 range. And then the recession hit, and now I've watched this conference really claw back, and now we're moving way ahead up here. I think there's going to be a record since the recession of about 35,000 people out here. So that's a pretty good indicator, a barometer of how retail is performing today.
Let's talk a little bit about what is involved in this REIT, because a retail REIT is different from a hotel REIT or a medical buildings REIT. So why this REIT at this time, and is there something special that stands out to you about it?
Sure. Well, you know, first of all, let's look at the, you know, overall shopping center sector today. I mean, there are actually a record number of shopping center REITs. In fact, arguably there's too many. I think, you know, there's too many public companies, and it's hard for one company to provide some unique competitive advantage. But this particular REIT, ROIC, does have that differentiator that I think is essential. You know, this company, they have 95% of their portfolio has a grocery component. And when you look at retail today, I mean, you're right. I mean, it's certain sectors are struggling, especially the ones that are competing one-on-one with the internet and with Amazon. Well, obviously, with a grocery-type tenant, you've got a very recession-proof or necessity-branded type of tenant. And again, ROIC has around 95% of their exposure to grocery stores, companies like Safeway and Kroger. So that's one competitive advantage we have with this company. The second one, which is probably the most important differentiator, is the fact this company is just on the West Coast. They operate in 3 primary states, which is California, Washington, and Oregon. And that's where 100% of all their revenue is generated from those states. And the reason that I like that particular geographic focus is because this is where you have the highest incomes in the country. And so when you take the necessity component and you take the geographic focus, this is really what makes ROIC an attractive investment.
The thing, of course, that everybody looks at on REITs that you haven't mentioned is the yield. And in this case, with Retail Opportunity Investments, it's about 4%. Not exorbitant, not sky high, not exceptionally low. Obviously, you've got to feel it's consistent or it wouldn't be the Intelligent REIT of the Week. But do you believe that this is one of those cases where, you know, nice, solid, stable, and, oh, by the way, maybe growing?
Yes. And you know, Chuck, one thing I want to mention with this company, they actually listed in 2010, or 2009 they actually formed. And they formed as a blind pool. They raised about $500 million, which is kind of amazing in itself to aggregate that amount of capital with no assets. As they've grown, I am invested in the stock, but it took me a number of years to watch some trends unfold with ROIC. And what I've noticed over that period is that they've grown into their dividend. Unlike companies like Wheeler, for example, which had to cut their dividend, they came out with too high of a payout. What I like about ROIC is the discipline that the company has executed is they have grown into that dividend. So now you've seen pretty steady dividend growth. And obviously, you want a company with decent yield, but you also want a company that's got really solid dividend growth and earnings growth. And that's what you see with this company. They just reported first quarter earnings, and they had a FFO growth of 9%. So you look at the growth of this company as well as the yield. The yield is actually around 4.2% today. The shares have pulled back a little bit, Chuck, which is really why I like this company. It's trading at a fairly decent margin of safety right now.
And that means a reasonable total return going forward would be what? I mean, what's an expectation on this kind of REIT?
Shares are trading today in the range of around $16.50 a share. And, I'm looking at the potential for this company. The big question, you always have to talk about the risk too. Can they continue to grow in these three states? And talking with the management team yesterday, it looks like they've got plenty of capacity, not only from a balance sheet, which is, by the way, their balance sheet is, they've only got 13% secured debt. They've got really a fortress balance sheet for a fairly small REIT that's got about $1.8 billion in assets. So I think they definitely have the potential to grow this company, to grow the earnings, and again, more importantly, grow the dividend. So, I'm looking for somewhere in the 20% range. I'm not trying to be greedy here with this one. It is not a bargain, but I think we've got sound value. The multiple is trading at around 17 times funds from operations. So you definitely got some value here.
Outstanding. It's ROIC, which normally means return of invested capital. In this case, it means the Intelligent REIT of the Week, Retail Opportunity Investments Corp. It's the Intelligent REIT of the Week from Brad Thomas of the Forbes Real Estate Investor. Brad, thanks for joining me on Money Life.
You bet.
Remember, for more information, you can go to iREITinvestor.com or you can follow Brad on Twitter. He's at @Swan_investor.